Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 9th of April, comes to you from London. And we start by looking at the dollar. Dollar fell back a bit on Friday, took prices just bearish below the cloud on the short-term chart, but lagging line still holding up. So we are still holding that short-term bullish position just, but we really are in this range. We have been for a few months now. It's a 2% range around the 90 level on the dollar index. So we are going sideways on the dollar. And we're seeing the euro similarly in that same range against the dollar, so euro dollar, and euro just improving slightly on that dollar weakness. So we're seeing that the yen normally shows up the real dollar performance, and we saw that it didn't fall back as heavily. It's remained bullish here. So dollar yen is a good chart to keep an eye on for what's really happening with the US dollar. Looking at sterling. Sterling sitting at 141, looking stronger against the dollar. Dollar weaker, sterling stronger. Uh, we do have upside targets to 142.70, 144, so it does look like we're finding some support there for sterling. Taking a look at sterling against the euro, we see here we're looking stronger as well for sterling, and against the Swiss franc, also looking stronger, and against the Aussie dollar, also looking stronger here, jumping to 184. So we are seeing sterling stronger across the board. Bitcoin up about 1.5% this morning, but more significantly, we're through the cloud on the medium-term chart. We've got upside targets, one of 7,500, which is 6% upside. We've not yet activated this next target to 7,400. But it does look like that 7,500 area is attainable now on the short-term chart. Taking a look at the US market, closed down about 2% on Friday, so the end to a pretty bad week. We see here quite a range on that weekly candle, and we did just fall away in the end on Friday. Not hitting the low for the week, but we really are building this ascending triangle in the chart, and that is looking a bit worrying for a sell-off. We've got downside targets on the S&P that are not activated yet, so it's still too early to call. But if we look at the Nasdaq gives a clearer picture, and we have got activated downside targets here. So it's all about tech, and we are through on the cloud here as well. It does look like the market is forming a top. The key thing here is we've got to see a fall through the February lows to be convinced, and that's the Dow theory, the lower lows. That's what's going to govern that. And we look at the Dow Jones Index. We see here also downside targets activated, and that just shows us that we're bearish again on all three time frames. And the Russell 2000 also bearish but not yet activated downside target. So we're seeing on the Russell 2000, the S&P 500, the broader indices have not yet activated their downside targets, whereas the shorter held indices like the Dow and the Nasdaq 100 have actually done that. Looking at the E-mini, we see here the S&P down 0.75%, and if we look at the Nasdaq E-mini we're up 0.75%. The Nasdaq E-mini we're up nearly 1%. After Friday's falls, we shouldn't be surprised to see some reactive moves to the upside. So over 2% down, less than 1% up. It's a bit of two steps down, one step back up. Seeing the FTSE this morning looking stronger, and we are just seeing there we're above the cloud, and on the FTSE mid 250 also we're seeing here moves above the cloud. The DAX index we're seeing here looking stronger, and the CAC 40 also looking stronger as well. So that is a sign that we're just seeing some of the markets recovering. A lot of this to do with the trade war rhetoric, and more people are commenting that it is just that rhetoric. And we're not seeing these trade actions biting, but nonetheless, the fears did drive the markets lower last week. We are seeing this fear factor. Japan looking more bullish above the cloud on the short term, bearish medium term. Hang Seng was up over 1%, 1.25%, and still bearish in the short term, and the medium term hasn't yet turned back to bullish. The Chinese market actually still looking pretty bearish below the cloud, and the Indian market was up 0.5%, looking better short term than it has been. The Aussie market had a pretty bad week last week. We can see that here in the candles here, but we did recover just a little bit towards the end of the week, but we're still short term bearish. Brent crude is up just under 0.5% this morning, but still bearish below the cloud, sitting at $67. WTI much the same, up about a 0.25%, and again bearish below the cloud. US nat gas just sitting in the doldrums at this 268.69 level, still bearish there. Taking a look at gold. Gold recovered somewhat on Friday, but is still bearish below the cloud. We're just not managing to break out here. And silver did actually have a better day, but it is still bearish below the cloud. US 10-year yields back into the 280s, 2.8% more bullish here. Upside targets to 3, 299. That's activated 2.99%. So we haven't yet moved into that 3 territory, but looks like we're going to have another go at that target. Apple was down 2.5% on Friday. Most of the tech stocks are really selling off quite heavily. Amazon also down significantly. Alphabet, Google, of course, was also bearish. We're seeing really across the board bearishness. Facebook, strangely, did recover quite a bit in the week, having been oversold. So it got back into the high 150s, but still bearish in the short and medium term. And Microsoft was probably one of the more resilient performers, but also in the end came off that 2% on Friday. So we're looking just here. We're not bearish on the medium term chart, but the short term chart is. It's all about tech at the moment. If you're in stocks, keep an eye on those tech charts for this week coming. That's it for today. Until tomorrow, happy charting. See you then.